Hi. If you're thinking that 2024 might be a year when you want to buy a house, then this video is for you, where I just cover a variety of things you might need to know before buying a house. The thing about buying a house is, for most people, it's the biggest purchase you'll ever make. And additionally, most people only buy 3 to 4 houses in their entire lifetime. And things do change. And so hopefully this video will help answer some of those questions. I'm Judy Hull. I'm licensed to sell real estate in Oregon. I live in Salem, Oregon, so I generally sell between Portland and Eugene. And if you have any questions, I'd love to help you. You can just add your questions to the comments and I'd be happy to try to answer those for you. You can also find my website at judyhullrealty.com or on Instagram at judyhullrealty. Okay, so first of all, the first thing to figure out is if you really are ready to buy a house. Now, usually people start right in at the financing, but there's more to it than that about buying a house. You need to figure out if it actually fits your lifestyle for right now. So 2 things I think about right off is, do I want to buy a house? So generally, long-term, owning your own home is a hedge against inflation. And there is a lot of security that comes from knowing that this is the price I'm going to be paying per month from here on out. And over the long term, like I said, it's been really good investment, but not like your usual investment, because also it's your place to live. But you need to know whether this is the place that you plan to stay for at least 2 to 5 years. Now, you don't have to stay in your house that long, but financially, it makes more sense to buy a house if you're going to be in that area for at least 2 years, 5 years, maybe much, much longer. So first of all, can you picture yourself living in this area for a while? And secondly, are you working in a job or own your own business? Is it in a place where it feels stable to you? It needs to be a minimum generally of 2 years. But more than that, you need to know if you're in a place where you can picture yourself being for a while financially. So then there's also the ideas of, do you want to own your own home? Because owning a home has so many perks to it, but it also is a lot of work. You know, if something goes wrong, it's on you. So that's something you need to think about. Like, how do you feel about being responsible for maintenance and repairs and all that kind of thing? If you feel like your life is in the right place to buy a house. So if you feel like you're ready to buy a house, the next thing to consider, of course, is the finances. So you know, if you're renting right now, how much you spend per month on housing and how comfortable that feels. And that's definitely a good starting spot. But in addition to that, you're going to need some money in savings. So hopefully you have an emergency fund that you're not going to touch for this house purchase, because you need to have an emergency fund for emergencies, not for buying a house. In addition to that, you're going to need your down payment and your closing costs, assuming that you're going to have a mortgage. So down payment could be 0. There are some 0 down payment programs, but more commonly it's between 3 and 20%. That would be 3 to 20% of the purchase price of the home. So 3.5 is a common for a first-time home buyer, or if you're pulling out some equity from a home and buying another home, 3 to 3.5% is common. 20% is nice, or more, because then you're not going to be charged mortgage insurance on top of your regular payment. But so that amount for your down payment, plus you're going to need closing cost money. So closing costs for your mortgage could be another 3 to 5% of the purchase price. And now we, in this current market in January of 2024, we can ask the seller to help pay for closing costs. But I am still seeing properties on the market where the seller offers closing costs, like in the notes of the multiple listing. So that might happen, but we can't really count on it. You need to have the money set aside and not really count on the seller being willing to pay your closing costs. So 3% minimum down payment probably, and another 3 to 5% for closing costs. All that total in your savings account, ready to roll. I would always suggest that you start by talking to a realtor and a lender. So the lender could be, if you are a member of a credit union, that might be, and if your credit union does mortgages, that might be a good place to sit down and talk to somebody. You could also talk to a mortgage broker. And I have a list of mortgage brokers that my clients have used in the past that they've been happy with. And all these people would be willing to sit down with you in person or over the phone, answer your questions, and kind of talk you through the process. The nice thing about a mortgage broker is they sell a variety of different types of mortgages. So they can help you figure out what is going to make the most sense for you. Which type of mortgage, which one would have more in closing costs. There's just a variety of things to consider. So I would suggest you talk to a mortgage broker, but you can go to your bank. Do not do an online lender, because the only time we've had really big problems with communication and that kind of thing has been when people try to move with a online lender. I know they have their place, but personally I am not a fan. So once you have been pre-approved for a mortgage, so that means you've done the application and you've been pre-approved, you know kind of generally what kind of mortgage product you're going to want, then we're ready to go shopping. Hopefully by now you've put together a list of things that you really want. Maybe number of bedrooms, number of bathrooms, maybe it's a specific location, maybe you need a one level or at least a main bedroom on the one level. There's a variety of things to consider. So then we get to go shopping, and I will set up appointments for you and we'll go in person to look at the homes that you've identified. And don't be surprised if your wish list and your idea of what you need and want changes as we shop. That's okay. But we'll look at houses until we find one that meets what you want or looks like one that you're really interested in. And then when we get to that point, you're going to put in an offer. Now with real estate, nothing you do verbally really counts. It has to be a written contract. So your offer is a contract, and it's several pages and a lot of legalese involved in that. And I will write that up for you and go over it with you line by line, and then you'll sign it. So part of your offer, not just the amount that you're willing to pay, so you offer the price that you're willing to pay, but also how much money you're going to put down, how much you're going to put in earnest money, and we'll talk a little bit more about that. What type of loan product, if we're having a loan, that you're going to use, what kind of inspection period you want, and what kind of inspections you want, so the length of the inspection period and the type of inspections you want, and when you'd like to close on this deal. It usually takes a minimum of a month if you're having a mortgage, and how long the seller has to respond to your offer. So we write that all up really specifically, and then you sign it and I send it to the home seller's real estate agent. And they have usually 12 to 24 hours, whatever you decided, to respond to you. So the response for your offer could be yes, and then we move forward. It could be no, and then we're back to shopping. Or it could be a counteroffer. So maybe there's a part of your offer that they don't want to agree to, but they have a counteroffer for you. So they might counteroffer the price or the time of closing, or there's a variety of things they could counter. And basically, if you get a counteroffer, the ball's back in your court to decide if you want to accept their counteroffer or reject their counteroffer and walk away, or counteroffer their counteroffer. So we continue to negotiate. We continue to negotiate until we come up with a signed agreement, and then you're considered under contract. Once you're under contract, then you do your earnest money deposit. So earnest money is just a small amount. Well, it's not insignificant amount, usually like 0.5% or 1% of the total purchase price, like maybe anywhere from $1,000 to $10,000 that you're going to take via check or wire transfer to the title company. And the title company puts it in an escrow account, and it just sits there while we go through the contract. And if we get to closing, That becomes part of your down payment or closing cost. And if the deal falls apart, in most cases, you get that money back because of your contingencies, which we'll talk about next. It shows the seller that you are serious about your offer. If you didn't put any money into the earnest money escrow account, then you don't have any skin in the game. So it helps you get your offer accepted, basically, by showing that you're serious, earnest about the whole thing. So you're going to deposit your earnest money. Usually, the Oregon contract usually gives you 3 days to get that deposit into the title company. And we also start our inspection period. I usually suggest that buyers ask for a 10 business day inspection period. So business days would be not Saturday or Sunday, not a federal holiday, but in other days. So it usually works out to be 2 weeks. And during that 2 weeks, you're going to get any inspections done that you want to have done and negotiate any repairs that might come up because of the inspection during that 10 days. So we want to get your inspection scheduled for as early in the process as possible, so you have as much time as possible. So I have a list of home inspectors that my buyers have used in the past that you're welcome to look into or hire. You pay for the home inspector, and it can cost anywhere from like $300 to $500-ish for a general whole house home inspection. It depends on area and it depends on the size of the house. So you're going to hire your whole house home inspector. They're going to come to the house. I will also be there during the inspection period, and you are welcome to come during the inspection. It can take 2 to 4 hours. And during that time, the home inspector goes through the attic and underneath the house and checks out all the appliances that are staying with the house and the systems to make sure that everything works. And from the whole house inspection, you're going to get about 12 to 24 hours later a report. And the report can seem overwhelming. Like, it's not uncommon for it to be 70 or 100 pages. And there's pictures, and it can seem a little overwhelming, but I just want to let you know that ahead of time, because there's no house that's perfect, no house where there's no such thing as passing a home inspection. The home inspection is just going to show you what's going on with the house as per that home inspector at that date and time. If there's actually things that are broken that need to be repaired, you may want to ask for the seller to make those repairs. Things that we wouldn't ask for repairs for would be like things that are just old, but they're still working. Normally we wouldn't ask for that in a repair, but it varies dramatically by the situation. So in addition to a whole house home inspection, you might want to add on a radon inspection. Now, radon is an odorless gas that's pretty common in the Pacific Northwest, and it's known to cause cancer. And radon remediation is not super expensive, so it can be remediated. It's definitely not a deal breaker, but you would want to know if there's not already a radon remediation system set up in the house. You'd want to know. So you might want to add that on. That could be another $100-ish. You might want to do a sewer scope, especially if it's an old house. Or even in brand new construction houses are known sometimes to have problems with the sewer line. And the sewer line from the house to the road is the responsibility of the homeowner. So a sewer scope could be an add-on you would want. In the Pacific Northwest, my buyers generally don't ask for a pest inspection, but maybe if the original whole house inspection showed some signs of pests, then maybe we would want to hire another inspection based on that inspection. So anyway, all those inspections are done during the inspection period, and then you decide what you're going to do about your newfound knowledge. Now, you pay for the home inspections and they are yours. The seller does not see them unless the seller asks you to share them, and then you decide whether you want to share them or not. Because you paid for it, it's your information. So based on the home inspection, you might say, good, we're good. It's good to have this information, but there's nothing more we need. Or we might ask the seller to do some repairs. So if we do that, we would send a repair request addendum. We might ask the seller to do repairs, or we might ask the seller to give you some money at closing in lieu of repairs. So those are kind of the two ways you could go in the repair request addendum. It's just another part of the contract. We have to be super specific about what we want. And if you're going to have repairs done, then you need to check and make sure the repairs have been done afterwards. So with the repair, if you decide to submit a repair request addendum, then the seller can respond by saying nope, or yes, or I'll do this but not that. So if they say no, back in your court, you decide whether you want to move forward or not. You can walk away from the deal at this point and get your earnest money back because we're in the inspection contingency period. They could say yes, and then great. The seller either makes the repairs, or what's actually more clean-cut contract-wise is if they give you money in lieu of repairs, and then we just move forward. Or they might say, we'll do this but not that, and then again, the ball is in your court and you decide if that's going to be okay with you or not. So once we come to an agreement between buyer and seller during this time, then we move forward and we're done with the the inspection contingency. So that contingency is done. The other contingency that's really common in a buyer's offer is a financing contingency. So if you're getting a mortgage, then there's a financing contingency. Now you have already been pre-approved. So unless something terrible happens, that's not going to change. So you are probably not going to be the reason that a financing contingency makes the deal fall apart. But it could be because of an appraisal. So the bank or lender that's lending on your mortgage is going to require you to have an appraisal done, which you pay for at closing, usually that one. And they don't get to pick their appraiser. The appraiser comes out and determines the value of the house. Now, an appraiser's determined value of a house can totally be different than the market value of the house. They have different specifications that they're looking for. So in our market, appraisals have not been an issue lately, but they could be. So if the appraisal came back and said that the appraised value of the house is exactly what you offered to pay for the house, then we're good, we're golden, and that contingency is over. If the appraisal comes back and says that the house is worth more than you offered to pay for the house, cool, nothing changes, and you just have a little equity, cool, and we move forward. If the appraisal comes back below what you said you would offer for the house, then it can be an issue. If that happens, you as the buyer could say, oh look, let's say it came back $10,000 low. You could say, oh look, I have this spare $10,000 in cash. I'll just add that to the deal and no worries. And we'd move forward. But if you don't have the spare cash or you don't want to spend the spare cash, then the next option would be to ask the seller to lower the price by $10,000. And if the seller says, okay, I don't want this deal to fall apart, I will lower the price, then we do all that paperwork to reflect the lower price and we're good to go. If the seller doesn't want to and you can't or don't want to, the deal could fall apart at this point. You would get your earnest money back. It would fall apart due to the financing contingency. So those things, the repair contingency, the inspection contingency, and the financing contingency, those are the two things that most commonly cause a deal to have to be renegotiated or to fall apart. But once we get past those two contingencies, then usually we're cleared to close. And things just move along as for the timeline that we set out in the beginning of the contract. Just a couple days before closing, the title company will reach out to you and give you the closing documents. And that'll show you exactly how much money you need to bring with you to the closing, or probably you're going to wire that money to the title company ahead of time. You're going to look over it and make sure it's exactly as expected. And things can vary a little bit by time of month or time of year, but it should be pretty close to what you've already been expecting because of your discussions with your lender. So you're going to look over those documents and then make an appointment at the title company to go in person to sign all the documents, unless for some reason you can't be there in person, and then the title company will hire a mobile notary to come out and meet you wherever you are, and you'll sign all the documents. You'll need to bring ID with you, and both or however many people are on the deed need to be there to sign, and it takes a while. It takes about an hour to sign all the documents. I'll be there as well at the title company, just sitting there cheering you on. And once you sign everything, then we wait for the deed to be recorded. It could be another 12 to 24 hours. And then as soon as it's recorded, it's your house. If you have any questions at this point, there's a lot of things that can cause this deal to go one way or another. Like I said, it's a pretty complicated thing, but there's no reason why it can't go really well and you could end up with your new house. So if you have any questions, just put them in the comments, and thank you for watching.